You know what nobody's talking about? The fact that silver just crossed a threshold that historically only happens once every few decades. And if you're holding silver right now, or you've been thinking about it, the next few months could define your financial position for the next 10 years. Let me show you what's happening right now in the silver market that has some of the smartest money managers I know quietly repositioning their entire portfolios. Silver just hit levels we haven't seen since the early 1980s. But here's what makes this different from every other rally you've watched come and go. This time, the physical market is completely disconnected from the paper market. And that gap? It's widening every single day. I'm going to walk you through exactly what's happening, why this moment is different, and what you need to understand before this window closes. Because once the broader market catches on to what's already happening in the physical silver market, the opportunity we're looking at right now will be gone. Let's start with something most people don't realize. The silver market is tiny, absurdly tiny. The entire global silver market is worth less than the market cap of a single large tech company. We're talking about a market so small that when real money starts flowing in, the price doesn't just move, it explodes. And right now, real money is flowing in. Institutional investors just poured over $40 billion into silver-backed exchange-traded products in the first half of this year alone. That's not retail investors buying coins, that's pension funds, hedge funds, and family offices moving serious capital into physical silver exposure. Why now? Because they're seeing something in the supply and demand fundamentals that hasn't existed in modern market history. Here's the reality. Silver supply is getting tighter by the month. Global mine production has been essentially flat for years. We're not discovering new major silver deposits. The existing mines are getting deeper, more expensive to operate, and producing less silver per ton of ore. Meanwhile, demand is exploding from directions most people aren't even tracking. Solar panel manufacturing alone is consuming silver at rates that would have seemed impossible just 5 years ago. Every solar panel requires silver for its electrical conductivity. And as countries around the world accelerate their renewable energy build-outs, that demand isn't slowing down. It's accelerating. Electric vehicles use significantly more silver than traditional cars. The charging infrastructure being built out globally? Massive silver consumption. 5G networks? Silver. The entire technological transformation happening right now is built on silver. But here's where it gets really interesting. While industrial demand is surging, investment demand is just starting to wake up. Central banks have been accumulating gold at record levels. Everyone knows that story. What fewer people are tracking is what's happening in the silver market, as investors start asking themselves a simple question. If central banks are buying gold because they're worried about currency debasement, what happens to silver? Historically, silver moves with gold, but it doesn't just move, it amplifies. When gold goes up 20%, silver typically goes up 40 or 50%, sometimes more. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been wildly out of historical norms. Right now, even after silver's recent gains, that ratio is still suggesting silver is undervalued relative to gold by historical standards. And when that ratio corrects, as it always does eventually, the move in silver can be breathtaking. Let me tell you about what happened in 2011. Silver went from around $18 an ounce to nearly $50 in a matter of months. People who had been holding silver for years suddenly saw their positions triple. But here's what most people forget about that move. It wasn't driven by industrial demand. It was driven by investment demand and a supply squeeze. The current setup looks eerily similar, except the fundamentals are actually stronger now. Back in 2011, we didn't have the industrial demand story we have today. Solar was a fraction of what it is now. Electric vehicles were barely a thing. 5G didn't exist. The industrial consumption of silver today is structurally higher and growing faster than it was then. And the supply situation? It's actually worse now. Mine production hasn't kept pace with demand. Above-ground inventories have been drawn down. The COMEX warehouses, where silver futures contracts are settled, have seen significant inventory declines. Here's something that should make you pay attention. The spreads between paper silver prices and physical silver prices have been widening. When you go to buy physical silver, You're paying premiums over the spot price that are significantly higher than normal. That's not supposed to happen in a well-functioning market. What that tells you is there's a shortage in the physical market that the paper market hasn't fully priced in yet. And when paper markets eventually have to reconcile with physical reality, the adjustment can be violent. I've been watching the silver market for a long time, and I've never seen the commercial traders positioned the way they are right now. These are the big banks and trading houses that typically suppress silver prices through massive short positions. Their short positions have been reduced to levels we haven't seen in years. When the commercial traders reduce their shorts, it removes a massive source of selling pressure from the market. It's like taking the brakes off. And right now, those brakes are coming off at the exact moment that investment demand is starting to accelerate. Now, let me pause here for just a second, because this is relevant. If you're sitting on retirement accounts worth $100,000 or more, and you're thinking about how to protect that wealth in an environment where currencies are being debased and markets are increasingly volatile, I put together a free guide on how gold IRAs work. It's in the description below. It covers how you can get physical precious metals into your retirement account without triggering tax penalties. Worth checking out if that's something you're considering. All right, back to what's happening in the silver market right now. The geopolitical situation is adding another layer to this story that most people aren't connecting. We're watching a global shift away from dollar dominance. The BRICS nations are actively working on alternative payment systems. Central banks around the world are diversifying their reserves away from dollars and into hard assets. When countries lose faith in the reserve currency system, they don't just buy gold, they buy silver too. And when you're talking about nation-states with trillion-dollar economies starting to accumulate silver, even a small percentage allocation can move the entire market. China has been quietly accumulating silver for years. They're not announcing it. They're not making headlines. But if you track the import data, you can see it. Massive amounts of silver flowing into China and not coming back out. Russia has been doing the same thing. After being cut off from the SWIFT payment system, they've been aggressively accumulating precious metals. They understand that in a world where your currency reserves can be frozen with the stroke of a pen, physical assets that can't be confiscated remotely become incredibly valuable. This isn't speculation. This is documented policy from multiple countries. And it's happening right now while most investors are completely focused on stocks and bonds. Here's what makes this moment unique. We're at the intersection of multiple powerful trends, all converging at the same time. Industrial demand is structurally higher and growing. Investment demand is just starting to accelerate. Supply is constrained and getting tighter. The commercial traders have reduced their short positions. Central banks are accumulating precious metals. And the physical market is showing signs of stress that the paper market hasn't fully priced in. When you get all of these factors lining up simultaneously, you don't get a normal market move. You get a paradigm shift. Let me tell you what happened in 1979 and 1980. Silver went from around $5 an ounce to $50 in less than 2 years. People thought it was just the Hunt brothers trying to corner the market. But the Hunt brothers couldn't have done what they did if the underlying fundamentals weren't already set up for a massive move. The inflation of the 1970s had destroyed confidence in paper currencies. People were desperate for real assets. And when that investment demand hit a market as small as silver, the price went parabolic. We're seeing echoes of that setup right now. Inflation has been running hot. Real interest rates, when you adjust for actual inflation, have been negative. That destroys the purchasing power of cash and bonds, and it drives investors into hard assets. But here's what's different this time. In 1980, after silver hit $50, the Federal Reserve jacked interest rates up to 20%. That killed the inflation and killed the precious metals bull market. Today, central banks can't do that. The debt levels are too high. If they raised rates to 20%, it would bankrupt governments and crash the entire financial system. They're trapped. They have to keep rates relatively low and keep printing money to service the debt. And that means the conditions that drive precious metals higher aren't going away. They're getting worse. The silver market is also dealing with something that didn't exist in 1980, the massive short positions in the paper market. For years, the big banks have been selling silver futures contracts far in excess of the actual physical silver available for delivery. It's been a way to suppress prices and manage the market. But That strategy only works as long as nobody calls their bluff and demands physical delivery. And right now, we're starting to see more and more investors demanding physical metal instead of just trading paper contracts. When that happens, when the paper market has to actually deliver physical silver and there isn't enough to go around, you get what's called a short squeeze. And in a market as small as silver, a short squeeze can send prices vertical in a matter of days. I'm not saying that's definitely going to happen, but I am saying the conditions for it are more favorable right now than they've been in decades. Here's something else you need to understand. The silver mining industry is not in a position to rapidly increase supply. It takes years to bring a new mine online. You have to discover the deposit, get permits, build the infrastructure, and start production. Even if silver prices doubled tomorrow, it wouldn't result in significantly more supply for years. And many of the existing silver mines are actually byproducts of other mining operations. Silver is often produced as a secondary product from copper, lead, and zinc mines. So even if silver prices go up, it doesn't necessarily incentivize more silver production if the primary metals those mines are producing aren't also going up. This creates an inelastic supply situation. When demand surges, supply can't respond quickly. And that's when you get explosive price moves. The investment community is just starting to wake up to this. For years, silver has been ignored. It's been boring. It's been range-bound. But boring markets that suddenly become interesting are where the biggest opportunities exist. When everyone is already in a trade, there's no one left to buy. But when a market has been ignored for years and the fundamentals suddenly shift, you get a rush of new buyers all trying to get in at the same time. And in a small market like silver, that creates incredible price momentum. I've been talking to fund managers who are starting to allocate to silver for the first time in years. These are sophisticated investors who manage billions of dollars, and they're telling me the same thing. The risk-reward in silver right now is as compelling as they've seen in their careers. The downside is limited. Silver has industrial demand that provides a floor. Even in a recession, solar panels still need to be built. Electric vehicles still need silver. The industrial consumption creates a baseline demand that supports prices. But the upside? The upside is massive. If investment demand really kicks in, if we get a supply squeeze, if the paper market has to reconcile with physical reality, silver could easily double or triple from current levels. And that's a conservative estimate. Some analysts are talking about silver going to $100 an ounce or higher. That might sound crazy, but when you adjust the 1980 high of $50 for inflation, it would be well over $100 in today's money. So we've actually never exceeded the inflation-adjusted all-time high. Think about that. Silver would have to more than double just to match its previous peak in real terms. And the fundamentals today are arguably stronger than they were in 1980. Here's what you need to understand about market psychology. Right now, most investors are skeptical about silver. They've been burned before. They've watched it rally and then give back all the gains. They're waiting for confirmation before they buy. But by the time you get confirmation, by the time it's obvious to everyone that silver is in a major bull market, the easy money has already been made. The people who make life-changing returns are the ones who position themselves before it's obvious. I'm not telling you to bet the farm on silver. I'm telling you to pay attention to what's happening and make sure you understand the opportunity in front of you. Because moments like this don't come along often. The last major silver bull market was over a decade ago. If you missed that one, this might be your second chance. And if you caught that one, you know exactly what I'm talking about, and you're probably already positioning yourself for this one. Let me tell you about the people who made fortunes in silver in 2011. They weren't the ones who bought at $45 hoping it would go to $50. They were the ones who bought at $15 and $20 when nobody was paying attention. They were the ones who understood the fundamentals and positioned themselves before the crowd showed up. Right now, we're in that early phase. The fundamentals are lining up. The smart money is starting to move. But the crowd hasn't arrived yet. And that's exactly where you want to be. The silver market is also benefiting from something that didn't exist in previous bull markets: the ability for retail investors to easily buy and hold physical silver or silver-backed securities. You can buy silver coins online and have them delivered to your door. You can buy ETFs that hold physical silver with a few clicks. The accessibility has never been better, and that accessibility means when the investment demand really kicks in, it can happen faster and more forcefully than in previous cycles. You don't need to find a coin dealer and pay huge premiums. You can allocate to silver instantly, and when millions of investors can do that simultaneously, it creates buying pressure that can overwhelm the market. The technical picture in silver is also setting up beautifully. We've broken out of a multi-year consolidation pattern. The moving averages are aligning bullishly. The momentum indicators are turning positive. For traders who pay attention to these things, silver is flashing buy signals across multiple timeframes. But more important than the technicals are the fundamentals. Because technicals can fail, fundamentals don't lie. And the fundamental story in silver right now is as compelling as I've ever seen it. We have constrained supply meeting surging demand in a market that's too small to absorb large capital flows without significant price appreciation. We have geopolitical tailwinds from de-dollarization and central bank accumulation. We have industrial demand that's structurally growing. And we have investment demand that's just starting to wake up. When you put all of that together, you get a setup that doesn't come along very often. And the people who recognize it and act on it are the ones who end up with generational wealth. I want to be clear about something. I'm not promising you that silver is going to the moon tomorrow. Markets don't work that way. There will be volatility. There will be pullbacks. There will be moments where you question whether you made the right decision. But if you understand the fundamentals, if you have conviction in the thesis, those pullbacks become buying opportunities rather than reasons to panic. Because the underlying story hasn't changed. The supply is still constrained. The demand is still growing. And the market is still too small to absorb the capital that's starting to flow in. The silver holders who are going to win are the ones who have patience and conviction. The ones who understand that this isn't a trade, it's a position. And positions take time to play out. But here's why this moment is critical. We're at the beginning of what could be a multi-year bull market in silver. And the returns in the early stages of a bull market are typically the best. The move from $20 to $40 is a 100% gain. The move from 40 to 80 is another 100%. But that first double is often the easiest and the fastest. Right now, we're potentially at the start of that first leg. And if you wait until silver is at $40 or $50 to get involved, you'll have missed the most profitable part of the move. I've seen this movie before. I watched gold go from $300 to $1,900 over the course of a decade. The people who made the most money were the ones who bought in the $300 to $500 range and held through the volatility. The ones who waited for confirmation bought at $1,000 or $1,200 and made decent returns, but nothing compared to the early buyers. Silver is setting up the same way, and the beauty of silver is that it's more accessible than gold. You can build a meaningful position without needing 6 figures of capital. A few $1,000s can buy you a significant amount of silver. And if this thesis plays out, that few $1,000s could turn into something that changes your financial situation. But you have to act while the opportunity is still in front of you. Because once this becomes obvious, once CNBC is talking about it every day, once your neighbor is asking you about silver, the easy money will be gone. The silver market is giving you a gift right now. It's giving you the opportunity to position yourself in an asset that has massive upside potential with limited downside risk. It's giving you the chance to be early to a trend that could define the next decade of precious metals investing. The question is whether you're going to recognize this moment for what it is and take action, or whether you're going to look back in a year or two and wish you had paid attention when the opportunity was staring you in the face. This is your moment. The fundamentals are aligned. The technical setup is bullish. The smart money is positioning. And the crowd hasn't arrived yet. Everything you need for a major bull market is in place. What you do with that information is up to you. But I can tell you this. The people who understand what's happening in the silver market right now and position themselves accordingly are going to look back on this period as one of the best investment decisions they ever made. The silver market is at a turning point, and turning points are where fortunes are made.